What's going on, everyone? This is Kunal. In this video, I'm going to discuss Bitcoin dominance. First, I'm going to discuss whether Bitcoin dominance as a metric is important or not, and then I'm going to discuss whether higher Bitcoin dominance is a good thing or a bad thing. So first, here we go on CoinMarketCap. We can take a look at the data of Bitcoin dominance itself. And it shows you here, over time, starting from 2013, how Bitcoin dominance has moved as we have moved into the cryptocurrency market and we've gone into the modern day. So what we're looking at here is, over time, Bitcoin dominance has dropped, definitely. And recently we have had a Bitcoin dominance surge after the run-up in late December, early January. So the first question is Bitcoin dominance important as a metric at all? And Whale Panda, who's one of the OGs on Twitter, posted that Bitcoin dominance percentage is about as useful as a metric as transactions per second on a blockchain that barely has any. So he's making the argument that Bitcoin that is not, Bitcoin dominance is not even that important. And Charlie Lee chimed in and saying that given the thousands of crap coins with the billion-dollar market cap, it's amazing that Bitcoin even has 40% of the market. It's pretty dominant if you ask me. And he makes a good point here. He's saying that, and take a look at what Whale Panda says here. And he plays right into what Charlie Lee says. Stop using Bitcoin dominance as an indicator. As soon as people started with pre-mine/tokens and BTC airdrops, it became irrelevant. I can create a Whale Panda token, create $1 trillion, sell one token for $1, or create 1 trillion Whale Panda tokens, sell one token for $1 on an exchange, and I'm a trillionaire with Whale Panda being the dominant coin. So the argument he's making is because of the saturation of, non-useful coins, or, coins that, aren't really doing much in the market, or old-fashioned, generation 1 coins that don't really have anything going for them. Bitcoin dominance statistic is not a great indicator, because and something like volume would be a better indicator of dominance or something like that. And if you were to go back to the market and you take a look at, say, top cryptocurrencies by volume, and you go to CoinMarketCap's homepage and you do a by volume search, then yeah, Bitcoin is by far and away ahead of the rest of the pack. And Tether and Ethereum are there as well, and there are others, but Bitcoin has by far the most volume. So this is also an indicator of adoption rate. So while Bitcoin dominance is really high, there may be something holding it back from having an even higher Bitcoin dominance, but the volume can be a better indicator of that. So that's one argument that Whale Panda is making, right? So, and he continues here, the BTC airdrop/forks also give a misleading market cap. The majority of these coins were never claimed. Many have been lost for years. This is literally printing money out of thin air and has a huge impact on the total crypto market cap too. And Bcash, Bitcoin, Gold, Diamond, Ruby, Pink, or whatever were created in a fair way, starting from zero with proof of work. I doubt many of them would have ever achieved a market cap of more than a few million. So what he's saying is Bcash, Bitcoin, Gold, the others, they've kind of piggybacked, because they were direct forks of Bitcoin, they've kind of piggybacked off of Bitcoin's valuation, as opposed to starting on their own and having their own network from scratch, etc. So that argument, the counter argument that I would make and say why Bitcoin dominance is an important metric is, this chart over here. And this chart over here explains how Bitcoin and blockchain have diverged over the past 12 to 18 months. And you can see on that chart that I show you for Bitcoin dominance, the chart that I explain here, as soon as it wants to load the data, any second now. Okay, the chart that I shows here, it says you can see right here, around mid, 2017, or around March, April 2017, is when the Bitcoin dominance really dropped under 50% for the first time, or really under 70% or 65% for the first time. And the reason is because blockchain has kind of come out of the shadow of Bitcoin. For a long time in the crypto market, Bitcoin was the dominant currency, and it was also a generation 1 proof of work coin, and there really wasn't another viable alternative that had reached some sort of adoption. And with, Ethereum rising up in 2017, that kind of changed a little bit, and there were others to go along with it. And that created blockchain, which is something different, which has also has a distributed ledger of cryptographic technology, but its potential replacement for middleware networks and clearinghouses in financial transactions where third-party verification is required, and applications extend to other networks where veracity is critical to performance. And what they're explaining there is, for example, you have industries where having things on time, having things done quickly, and data integrity, all of those things are really, really important. And blockchain technology can provide a solution to that. So by blockchain diverging from Bitcoin, that can have a direct impact here on this number right here, the Bitcoin dominance number. So that's my counter argument, that Bitcoin dominance is still a very important statistic, even if there are, unused coins or less used coin, non-adopted coins that account towards the total market cap. You can kind of set the Bitcoin dominance by volume instead of total market cap, and you can get a similar outlook still. And eventually those coins are going to fade into the abyss, and the main ones that are going to stay for a long time are the ones who are going to be moving forward as we look at the overall market cap and these statistics. So this article by Medium explains now by Jimmy Song is making a further argument against Bitcoin dominance. So he says why the Bitcoin dominance index is deceiving. So while the scaling debate has been going on for years, more recently there's been a lot of complaining and speculation about how Bitcoin will soon lose supremacy as the largest coin and how other coins will eventually take over. And in this article, he wants to show how Bitcoin dominance is inherently deceiving and why there isn't a crisis as many would have to believe. So I'm not going to go through the full argument here. But what he's trying to explain is Bitcoin, the people who are saying Bitcoin dominance is dropping is important. Bitcoin isn't as useful anymore as the on-chain fees are too high. Therefore, people are looking as alternatives to Bitcoin. Thus, value is flowing out of Bitcoin into other currencies, and this can be clearly seen in the lack of Bitcoin dominance. Users want new features, and they're going to other coins to get it. If current conditions persist, then Bitcoin will eventually be overtaken by another currency such as Ethereum, and Bitcoin will become the MySpace of cryptocurrency. And the argument rests on the idea that users are looking to do X with Bitcoin but can't. And his rebuttal here, really quickly, is that, saying Bitcoin isn't useful anymore because fees are too high is like saying that nobody goes to a restaurant anymore because it's too crowded. Bitcoin, and I'm going to make an argument that even he doesn't make here, which is that Bitcoin has by far the most trading pairs, and it has kind of become a reserve currency in the crypto market, if you will. And that's why I believe that Bitcoin will stay, because not just because it was the OG coin, but because of its lasting power, because of its brand. It has the #1 brand in crypto. When people think of crypto, they do think of Bitcoin, and it has the trading pair, so it has the staying power throughout all the other coins. And also, it has most other coins' model is built off of Bitcoin. Their code does come from Bitcoin. And if you're talking about bigger transactions, Bitcoin is still best for bigger transactions versus some of the other coins like microcurrency, which could be for smaller transactions. So that's Jimmy Song's argument. Now I want to give my argument on whether or not Bitcoin dominance going up, as it has been trending upward recently, is a good thing or a bad thing. And in my opinion, if you are just a Bitcoin purist, then Bitcoin dominance going up is definitely a good thing. Somebody like Andreas Antonopoulos would definitely be happy that Bitcoin dominance is going up, because he has come out against, the altcoins and the Wave 2 and Gen 3 altcoins. He's argued against, database storage on a blockchain is not, really supposed to be what cryptocurrency is all about, and things of that nature. So if you're a Bitcoin purist, you're happy to see this number go up. But if you're a bigger believer in cryptocurrency, and you're a believer in blockchain technology and what its use cases could be for the future, and all of the altcoins that are providing those use cases and those possibilities, then you don't want to see this number go up. Because for obvious reasons, other than obvious market reasons, which is that, the other altcoins are going to be suffering while Bitcoin's value goes up or stays higher than the other coins' values, of course, in Satoshi. Of course, you're going to be mad about that, but at the same time, you're also going to be mad because if you look at this chart right here, and you look at this divergence, and you look at the history where, yes, within the last 12 to 18 months, Bitcoin dominance has dropped, then by Bitcoin dominance going up, is kind of the market saying, we don't really think that these altcoins have anything. We don't really think that this idea of, enterprise blockchain and all this other stuff is really important in terms of these altcoins. And we think Bitcoin is just fine. So if you're someone who's a believer in these altcoins and blockchain technology, you're going to be mad. So that's my argument in either ways. And please do comment below on what you think. We are trending upwards in Bitcoin dominance again. So I do hope that in whatever cycle we go through here, that I do hope that we kind of consolidate quickly so we can get ready for the next bull run. Of course, in the previous video, I described how the 1,000-day moving average, 200-day moving average, and 50-day moving average for Bitcoin are still very far apart. And the problem with that's going to cause is the last time we started a bull run, those moving averages were very in close proximity, meaning a consolidation had already occurred before the bull run could begin. So I would really like to see the consolidation happen quicker so we can see the bull run quicker. So thank you very much for watching this video. I really hope you guys liked it. If you guys do want to subscribe to our YouTube channel, that would be great. But if you look at our online website here at altcoinbuzz.io, we have a podcast, we have news and updates, we have about section. We also have a Twitter page where you guys can follow us, where we have almost 77,000 followers. And you guys can also follow Altcoin Buzz Ladies at abuzz_ladies, where they put out their latest videos. They're rising up now, over almost 3,300 followers. And last but not least, please do like this video, and please do subscribe to us on our YouTube channel, where we have almost 209,000 subscribers. So thank you very much, guys, and have a great day.